Hi, it's Lee, and welcome to the Tesla Economist. From how some people are reacting to Tesla, I'm not entirely sure that the concept of supply and demand is that clear. So I wanted to go through an entire scenario to illustrate best how it works. But the fact is, demand is not an issue for Tesla. Instead, prices. It seems that many people are struggling to really understand how supply and demand works. If you have a business and sell a product that is very popular, it means a lot of people want it. This is your demand. In this scenario, most businesses try and find ways of producing more of their products to make sure that they can sell to all of the people trying to buy their products. This means increasing supply. However, to increase supply, it may not always be as easy for some industries as much as others. For example, software is very simple, especially if it's just downloaded from the cloud. But if it's a physical good that must be manufactured, then you may need to expand your production lines. This may involve building new factories or expanding existing, and then you can produce more of this product. However, your product may need other components and materials from your suppliers, so you increase your orders with them for more parts, but they're facing the same issue that you now face, and they may also have to expand their factories. They also may not want to do that just for you, as they don't know how long your additional demand may last. They don't necessarily want to expand for just one customer, only to potentially lose that customer and be left with all this additional expense. Yet your business has all this demand still, and you aren't able to supply enough products to your customers. And you now have a backlog building up, and customers are unhappy that they have to wait months in order to get your product shipped to them. Well, instead of just increasing supply, you can increase price. You've created too good a product, offering too much value to your customers, and thus you must adjust the price accordingly to find the market clearing price where supply matches demand, and you end up with minimal wait times or the minimal stock in inventory. But now, due to these price rises, you've also increased your profit margins, and your total profit has increased too. You're still trying to expand, but it's happening slowly. Instead, you also cut back on other expenses that were further adding to the demand issues, like advertising. You no longer need to advertise, as you don't need the extra business, and instead, that is now also added further to profits again. So your business now has a nice buffer of excess margin and the potential of later advertising if you need to get demand back again. Meanwhile, expanding supply has become even more profitable due to this additional margin and profits you've created. But it doesn't stop there. Your product is so good that all your customers are telling their friends about it too, and they also want one, and demand is still increasing further despite you already raising prices so much. So now you start to get desperate and trying to increase supply faster. Some of these new expansions that you've been working on are coming to completion, but you need more supplies. However, now you're significantly more profitable and are able to offer your suppliers some big contracts in order to justify their expansion too. You offer them long-term contracts, and they're now more willing to expand and supply to you, as the reward is now worth the additional risk and cost for them to undertake. And for some other suppliers, you decided to fund their entire operation and build them a factory to operate in, and some of the other suppliers are still not willing to play ball, but you're getting very profitable now, and you can actually afford to just buy these suppliers out. Alternatively, you simply start your own facility of what they're doing. You're vertically integrating and expanding. But what has this done? Now you have these longer term contracts. Your suppliers are giving you an even better rate than before, and some of this other vertical integration is also cutting your costs further, despite having to invest some large capital initially to get it started. But it all has a very positive return and ends up saving you more money. Your margins and profits have ended up increasing yet again, and you've managed to secure some great deals with all the other major suppliers for the components you want. Meanwhile, your new factories that you decided to build for expansion have come online. Unlike your previous old one, these factories are custom designed exactly around building your product, located in the right area beneficial to supplies, in a city that has great talent or talent wants to live in, and near your major customer base. You've also spent time and research in improving your production techniques, of which these new factories are also incorporating. Your suppliers are also expanding and see that you are not some over-the-night business and look like you're here to stay, so they're more eager to do business with you and see that you are very beneficial to their growth. They're happy to expand and offer you better deals, especially if they're worried that you may just end up doing the job yourself with more vertical integration. Now they're bending over backwards to keep you as a customer. These new factories and new deals have further reduced your costs. Not only that, despite all these efforts you're making, you still can't keep up with the demand, so you have no choice but only to keep raising prices. On top of that, you've been improving your production this entire time too, So demand has been naturally increasing due to more features your product offers and a better quality product overall. But now you are a noticeable success. Your products are being seen everywhere and your financials are public. People can see just how profitable your products are, especially with these high prices and low costs, and what are now absolutely insane margins and profits. The competition think that they can do that too. It's not that difficult. They just need to follow the same footsteps as what you did, and then they too could be making similar profits. This is what free markets are all about. Competitors to enter the marketplace and compete due to such high profits. It becomes incredibly attractive. It is easy to get investors who also like the look of prospective industry and potential profits. It looks like a great return on investment for them. Of course, if you have patents, then they could keep out some of the competition. But let's say this is a totally laissez-faire market and patents don't apply here. So the competition enter the market, except you've been at this for a really long time and have a lot of experience along with intellectual property. It's taken you a really long time to get to where you are today. You're also incredibly smart and know this industry better than anyone in the world. You pretty much built up the entire industry. It's your industry. How can these newcomers have any idea of what it really is? But they can't resist themselves. They see your profits and they want a piece of it. And they want it now. They don't want to have to grow slowly like you did. And they're backed by big money investors, so they can jump right into the deep end. Eventually, they start manufacturing their equivalent of your product. However, the technology is vastly inferior. It's simply too hard to catch up. Therefore, they have to offer their product at a much lower price than yours, as no one in their right mind would want to buy theirs over yours, due to the massive amount of extra value your product is able to offer. And unfortunately for your competition, they don't have all these economies of scale, vertical integration, refined manufacturing techniques, and massive amounts of experience that you've accumulated being in this industry alone for such a long period without any serious competition. Therefore, not only do they have to offer their product at a lower price due to it being so poor in comparison, their costs of making this product are significantly higher too. They end up offering a lower quality product at a lower price with a higher cost to make, so much so they actually end up losing money on it. But it doesn't defeat them, despite the huge losses. They have a lot of money behind them and have the knowledge that if they can catch up, then they've seen the rewards that can be achieved with your products. It's just a matter of reducing costs and improving the product. They go to their suppliers and tell them they also need to expand and need more components and materials. But a lot of these suppliers say they can't. They're already locked in to supply everything they have to you with long-term contracts. The competitors keep searching and find some smaller suppliers, but they cost a lot more too. But there's nothing else out there, so they have no choice, as you've taken all the low-hanging fruit, the larger, lower-cost suppliers, and locked them in for long-term contracts, only leaving the crumbs for any other potential competitor. They build factories too to try and save money by doing as much as they can themselves and in-house, except they don't have much manufacturing experience with this product and must use old traditional ways of manufacturing that are a lot slower, less efficient, and cost a lot more. Eventually, all these efforts they make only create a small saving overall, still nothing close to the cost that you can produce your product for. But these companies have had a fortune invested in them. They need to show something to their shareholders. So instead of trying to beat you on cost or units produced, instead they start offering more models and more varieties. They offer more customization and try and compete in other ways instead, all adding to cost. But now they have a reason to also increase their prices to their customer, offering a more differentiated product from you. Meanwhile, your demand is still increasing. You're finding even more revolutionary new ways of producing your product even faster and at a lower cost and improving it further and further. That demand keeps coming, and you haven't needed to add any other different models, as this first model is still just so popular, you can't make enough of it. However, each time you increase supply, then the costs keep coming down more, and more economies of scale kick in, and eventually you finally build enough factories that you're starting to meet demand. So your demand is finally starting to saturate, and because your prices are so high, the competition have also been able to price their vehicles a little higher too, so much so that now they're approaching close to break even. But the thing is that because you're making so many of your product now, well, the economies of scale are so ridiculous that the margins are just stupidly high. You can start cutting back on them somewhat and offer some lower price point variants to attract a larger market. Yes, all this so-called competition is at a lower price point where there's simply that much larger a pool of consumers for these products, But now you're finally at a price point where you have enough supply, you can start to lower prices and tap into this larger pool of customers. The competition have based all their numbers, expansion, returns on these current price points, and possibly even hoping to raise their prices further, along with continued expansion in demand and supply. But now you're offering lower cost versions of your product. They're losing their demand, as consumers who would have previously bought their product can now afford yours. The competition can't afford to lower their prices, or they'll end up losing too much money. Meanwhile, their only hope to actually make a profit was to further increase their sales, which are now being eaten up by your lower priced models. What happens from here on in? Well, you have to stay tuned. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.